All right, we're going to be doing a pre-market preparation for 7/16, July 16th. Something real quick to add with my market profile here. This is the overnight session right here. You can tell it's probably a little too zoomed out for you to see, but this is A period, B period, C period. That is the start of the New York session. And then when you get over here to the R, X, L, blah, blah, blah. That's the overnight session, just because the letters are later in the alphabet, obviously. The difference is I used to just have the overnight session from the prior day because I didn't think the past prior sessions were all that relevant. Something that I noticed today that's going to have me include the overnight session pretty much indefinitely is right here. So if I'm looking at this overnight session, I would say this is excess right here. This is the overnight session from the 13th, this is the overnight session from the 8th. Right here, if I'm just looking at this overnight session, I would say, okay, the auction to the downside is complete because of this excess. What I would be missing if I didn't include these overnight sessions from these prior days is right here. It's not to the T, not to the tick, but take a look. Right here, overnight session, overnight session, overnight session, all coming around to this level. We can even go back to the regular session from the 7th and the start of, you have that little spike down here. I mean, this is a level, you guys. This is a level that I would have missed that if I didn't see that. This is technically excess. The auction was complete to the downside in last night, but if you take a look at these, it's not. So if we do end up going short today, one of the things that I'm going to be potentially looking for is a break of this level because of how many times we've tapped that before and a continuation below. So that's just one thing I wanted to point out. So taking a look at this overnight profile, what we had last night in the Asia and London session was we had some price exploration below. And this right here, this spike up, if I separate that, you can just see that this was because of a news release. The PPI came out and we just spiked up. But if you're looking at last night and what happened, here was the close, here was the open. We have most of the distribution below that. Yesterday, this was a spike down, and spike rules are in play, right? This is, we're opening above the spike, which is generally bullish. And it's more bullish because it negates the spike. If we do start to see weakness early on, one of the things I want to look at is to watch to see how price interacts with the start of the spike right here. And that is going to be the value area low from yesterday. We're opening above the spike, which is more bullish again. If we start trading into the spike right here, that would switch my bias to short-term bearish. And what I'm counting on is this acting as support. And as price approaches that level, I'll be looking at delta, volume, and pace to determine which direction we should go. But I do expect this to be a level of interest if we get down there. So that's it for the market profile for now. If we jump over to the daily, somewhat of a nuance I want to show here, or just the way that I look at the daily with my moving averages. So you can see here, we closed on the 8 EMA. Now the market is stronger when you get separation from the 8 EMA. You can see we've been riding that here for a couple of days now. And if you look back at the action before that, we did have good separation from that 8 exponential moving average. Now we closed right at it, which tells me we have a chance for some weakness, simply because if we have strength with separation, then the opposite must be true. So if we don't have separation, then you should expect weakness. All right, so that's sort of how I think about that. So not a lot to derive from the daily, except for that somewhat nuance, or not even a nuance, just sort of a rule in the way that I look at it. Now we're going to be coming to the weekly here. And what I'm going to be doing, I think from now on, is just highlighting the levels of interest, the areas that I would want to participate in. And that's what we have right here. So you've got this low volume node right here. This is, again, is the 20, and this is the 5-day. and the low volume node right here, this is the 5, 20, the 20. That is in the thick of distribution, but right now I am leaning more on this level just because that's confluent with the value area low from yesterday. And the 5-day to me is going to be more important in this context than the 20. We'll see how that pans out, but just for now, that's where I want to participate for a couple of different reasons. You can see from the price action from the last 2 days here that we did try to get below the prior week's value area and failed. You have this prior month value area that we had some excess. So in other situations, if price is opening right here, this would be a great long opportunity as soon as we get acceptance because you did have that excess. Think of that like you're opening the door to a party and the party is for short sellers. You open the door right here, there was nobody. If there was short sellers, it would have gone lower. So you open the door, you took a look, took a peek, nobody's partying, so you leave and you go to the other door, which is the longs. There's a whole bunch of people there, and it's a lot more fun when you've got more people. That party sucks if there's nobody, right? So that's sort of how I look at that. So the laws of market dynamics is we've already accepted into the prior value area from the prior week, and we should traverse the entire thing. I would love to get in a long right here if we come back down to test that, and with the expectation that we move up to the top of that range. This again would be the prior day value area high from the market profile. So I've got 3 scenarios today. The first would be short below this low volume node. That's again confluent with the prior day value area low and the start of the spike from yesterday. The target would be this virgin point of control. That doesn't really count because it was overnight. So I do expect us to take that out if we accept into this spike from yesterday. If we do short, I want to monitor for continuation to break the poor low that was created from the last couple of overnight sessions and then maybe even this RTH session right here. So that'd be a short. Scenario 2 would be a long from that same level, anticipating that it acts as support. For both of those trades, or for any trades for that matter, I'm going to lean on cumulative delta, volume, and pace to judge which direction to go. If I do take a long from here, assuming we don't come up and test the point of control first, I am going to target the point of control, monitor for continuation to the top of the prior day value area high. Third scenario would be to short the prior day value area high. That's list level right here. And again, those are 2 low volume nodes. That's the only place that I'm going to participate in trades is those low volume nodes. And I love to have those line up with some type of market generated information. Shorting right here, what that would entail is if we don't get a move down first, or even if we do, maybe I'll take 2 trades, the long and the short, switch the bias. If we don't get a move down early on and price just moves up to the prior day value area high, I would want to short, assuming there's going to be some exhaustion. Again, judging by the pace in which we approach that level, cumulative delta, and then volume as well, that will judge whether I should take a short. If there is a scenario four of taking a long above that level, I mean, I don't know how much further it would go, just because if we start here, I mean, look, this is a big range day. This is the overnight. This is a range. Like if we get up to that level, that's how much further are we going to go, right? Our buyer is going to continue to show up right here. I just don't know. I suppose I could lean on cumulative delta for a long right there. I just think if of all the scenarios, if that's number 4, I think that has the least probability. But again, we're not taking any trades as of now in these recaps. So we're just going to see if any of those scenarios play out. All right. All right. Taking a look at the day here. So we opened up an A period. Let me expand this a little bit. Opened up an A period, came down to this low volume node. The sign of weakness was not able to be getting above that point of control. Essentially, we opened up, came down, went below, had 2 opportunities to get short in that low volume node, where I wanted to participate. And then we were out to the races. Price didn't look back. went right below that nuance thing that I had spoken about before. Turned out to be true. This was a level that needed to be repaired. At least that's my interpretation. Price went below. We looked for more sellers. No more sellers to be found. Price came back up. Rest is history. Let's take a look at the actual chart that we would have executed on and take a look. So here's your open, and this green line right here, this is the opening, the 5-minute opening range, mid, and that's a level that just seems to be relevant more often than not. That's simply why I'm keeping it up there. I'm not using it as any type of like reason to execute. If it's confluent with a low volume node, then great, adds extra confidence in the trade. But in reviewing this right here, so this is 8:30 at the market open. Right off the bat, we before in pre-market we had an uptrend right here. You can see we bust above this and we were hanging out above the developing value area high for a while. Tried to get up further, failed. Right here, you've got another law of market dynamics where we entered into this value area for the developing value area. Once we do, you assume price is going to traverse the whole thing. Just another thing to add for confidence. The thing that I want to point out here is if you're just looking at price action and you're not looking at cumulative delta or volume, if you're just looking at price action, you would have gotten stopped out like 3 or 4 times right here. You're like, oh, okay, great. This is coming up to my low volume node. Let me short right here. This is the Heikin-Ashi shift candle. So this is where you would want to enter. Boom, enter, stopped out. Okay, let's try it again. Boom, enter, stopped out. So that's the second trade. Third one, third trade right here. All right, here we go. Boom, enter. If you had your stop loss right at the top of that, you may have gotten stopped out, maybe slightly above. Obviously, you wouldn't have. But take a look at the cumulative delta here on the bottom in that sequence, right? So we've got a pretty big spike at the very beginning, negative spike coming down. That's great. That shows sellers are in control, at least for the short term. We move on down, price starting to move up a little bit, but volume not drying up, but just not on a lot of volume. This leg right here, this consolidation, was much less volume than right at the open, but it's still negative. So no reason to be long, right? There's a lot more red there. There's no reason to be long. The area that I want to focus on though is check this out. Get it so we can see a little bit easier. Right here, check this guy out. If you're looking at price action, you would have gotten stopped out 3 times before the trade actually went through. If you weren't, look at this right here. Right here. Boom, that leg down. That's a massive selling delta. A lot of volume, a lot of selling delta, big pace. We took out that entire consolidation range in one candle, one 3-minute candle. So that's where you would take your short, have your stop loss slightly above or right at, get stopped out, and take your second swing at it. But right here, price came back up, tested that level, but what happened? What happened, y'all? Right here, you've got divergence. We've got price came up to test that high, but delta did not. Sellers are still in control, right? So what happened right after that? Boom, another big delta bar down, accompanied with high volume and speed. That's what you want. And this came down, it tested the that level below. I'm really zoomed out right now, but this is that one spike below that we talked about. So so this is a sequence I'm going to go back and replay and put down in kind of like a highlight reel, just simply because this is the low volume node I was talking about. This is where you want to execute. No, there's no negotiating that. This was a perfect place to execute yet again. So we want to make sure that we memorize what stuff like that looks like, and more importantly, what's the context behind it. But this is, I don't know, picture perfect, let's call it. I mean, I don't know if it's always going to be, it's always going to stick out like a sore thumb, but right here, it's pretty obvious. We've got massive selling delta that just gives you kind of an idea that the sellers are probably going to be more in control than the buyers, at least for the short term. And then price attempting to make a high right here, and delta not. That's another That's another hint that we're going lower. And if you had gotten in, you don't have to wait for this candle to close, especially when volume is picking up. So like as volume, if this was happening real time, if volume is like halfway right here and continuing to build more than right here, that volume's not going anywhere. It's either going to stop right there and no other transactions, or it's going to increase. That accompanied with this delta bar, again in real time, imagine that delta bar is half the size of it that it currently is, which is substantial. That's still a big delta bar going down. You probably could have gotten in once price cleared VWAP right here. So you're looking at 85. Let's just see, 85. And if we had gotten down, if our take profit was the low right here, 57, that's 28 points. 28 points if there's 4 ticks a point and $12.50 a point. That's $1,400 on one single contract right there, right? So it's possible. We're looking, we did the scenarios earlier and how I choose to read the market, and we're looking for execution in this area. We're looking for certain things on cumulative delta. We're looking for certain things on volume and the pace. Those entries, they show up. You just have to make sure you execute when they do. So anyway, gonna make a video real quick showing that sequence, and we'll go on the next day.